Hello. Boy, what just happened there? Hold on, everyone. Hold on. What is going on? There we go. I don't know how that got messed up. Well, there we go. How is everyone doing? Hello, Anissa. Hello, George. Hope everyone enjoyed the red candle. Now into 3% gain tomorrow. Happy Tuesday, Connor. Again, how is everyone doing? Did the meme stonk frenzy? BBBYGME meme stonk frenzy. At some point, though, it was even like everything just got bid until we got the reversal. Everything got bid. It got to an insane point. So, hope everyone survived it. Are we going to get a slightly bigger pullback now? I mean, at one point it looked like a capitulation top. Well, there's not really a capitulation top. It actually looks like a blow off top. That's the word I was looking for. G box. I didn't see G box. Hello, Patrick. Greetings, everyone. Greetings, Ted. So, just a reminder. Tomorrow morning, retail sales, Feds, so 7:30, an hour before the open. Right at the open, Fed's Bowman is speaking. Hold on one second. And then we have business inventories at 9. And remember, we have FOMC minutes at 1. And then at 1:20, more Fed speaky. So, we'll get Bob on in 1 second. Some slight up to mixed in financials. Amazon was up pretty decent. Walmart just went on a rip your face off rally. Home Depot went on massive breakout and almost hit that first target. It hit virtually the 200 area. S&P hit the 200 area, so that's pretty much where we sit. FOMC 60-40 still, and we're still in positive gamma territory. Tomorrow, remember, before the open, Target and Lowe's. We got Walmart and Home Depot on the way, so Target and Lowe's tomorrow. And Walmart, beat their revised way lower earnings, and then it's insane, way higher than before they even guided. So we shall see. We shall see tomorrow. What else do we have? Oops, still got the VIX up there. Here we go. The S&P hitting the 200 before the reversal. So that's checked. NASDAQ, not yet at the 200. Dow, 200 is checked and through. And no close right at that magic 62.5. And the Russell checked through a couple days ago. So, with that, if you are new here, please do consider subscribing. We've passed the 5K, and we're on our way to 10K. So, also, if you haven't subscribed yet, please do consider it. Like the videos, and longer-term subscribers, please come back and leave a comment after the live stream is over, and also a like of the videos. With that, let me hit the magic. Hopefully, the magic Bob button worked. There we go.
What's up, guys?
How's Bob doing? 1 second. Here's Daredevil Bob. I don't experience fear. Iachino. All right, Bob, take it away.
Yeah, I don't know what to take away. I mean, if you guys watched the podcast on Thursday, I bought the NASDAQ. That was my trade. I was buying the NASDAQ. We're not quite at my target on the NASDAQ. We reached the 200 in the S&P, as you checked off. That's something I said that we would probably do post CPI. So pretty quiet. I mean, honestly, today was very quiet to me.
I saw there was a frenzy at one point. It was like scooping up everything that could be bought, would be bought.
Yeah, I mean, like I don't. In this particular rally, I don't necessarily care about the speed or the depth of it, or the volume overall. So far on the future side was only slightly higher than the last 2 days, not even close to the level of August 11th, not even close to the level of August 10th. So when you just look at it from a futures perspective, I didn't see much going on, to be honest. More interested in the crude oil and how it's sort of moving down toward that stop adjustment level on the weekly. I mean, that happened pretty quickly. It's not quite there yet, but happened pretty quickly. It's moving there. And we've got talk on this that there might actually be an Iran nuclear deal. Iran has responded to the latest proposal, and there's optimism, at least out of Europe, that something's going to get done. So that'll add more crude oil to the market, which is interesting, given that the demand has fallen off so precipitously. My good friend Cameron Dawson sent me her note this week, and in her note, it talks about underlying retail sales and how slow it actually looks right now. But I still believe that when we hit Jackson Hole, you're still going to hear talk of aggressively fighting inflation. And I don't think the market's prepared for that. So that would be kind of the next shoe to drop. Again, we've hit the levels. Both Mike and I said we were going to hit the 200 on the ES, and the crude oil target isn't quite there yet. It's certainly well on its way there. So I don't honestly have a whole lot of insight today. Again, I bought the NASDAQ, so happy about this rally. But overall, a lot of people still saying that the bear is over, can't really be over yet, technically. So still down on the year. The S&P and the NASDAQ are both still down on the year. And that's it. That's all I got.
Well, good afternoon, Davey. Good afternoon, Daniel. So what are your thoughts on retail sales tomorrow morning at 7:30 Central?
I think it's become a slightly secondary number simply because the effects of inflation, when you look at retail sales, the effects of inflation are not really hit with crude oil. Crude oil, gasoline sales is in the retail sales figures. They are calculated in there. We had not had the substantial drop that we now see. But again, I need to stress everybody, we're still up 200% from like 2018. 100%. We're still up about 25% from only like 12 months ago. So still really high gas prices overall. So retail sales is likely to be strong, but the underlying retail sales, when you start looking at the goods that don't fit into that sort of volatile food and energy category, it's weakening. It's weakening substantially. So always keep in mind, it's not inflation adjusted. So even if it comes in weak, that's what you'll see. You'll see a lot of people talk about how, well, it's weak, but it's inflation adjusted and prices have been falling, even though nobody said that on the way up. We were one of the few that were kind of trumpeting that, but there were other people that started to say it afterwards.
So, did you look at Home Depot or Walmart earnings at all?
I didn't. Honestly, Walmart pre-announced, and they pre-announced that things were going to be awful, and then they beat that awful. So what you're seeing now is a recovery of, if you can put up the Walmart chart, you're seeing a recovery of the pre-announcement decline. So,
well, hold on. Here's where they pre-announced. We're now.
Well, if you think about it from that perspective, again, we talk. I'm not a conspiracy theorist, but we certainly have a lot of people who have an idea of what's going on prior to it going on. So, they pre-announced we've not quite filled the gap.
Well, here's the gap from pre-announcement right here, not this one.
Yeah, I'm looking at the one to the left.
No, that was their prior earnings. This is when they pre-announced. They filled that gap, and now they're actually running at higher valuations substantially than when they pre-announced their bad results.
Yeah, and this is kind of one of the problems is like the EPS for the whole market has gone back up to, in some cases, 20, which I find to be a little early to do that, considering where I think the Fed is going to go and where inflation still is. So, yeah, inflation, again, one of the mistake the Fed made, in my opinion, is letting it get this bad. That's the mistake, because now there's just all they can do is drive us into a recession to make inflation go away. And as we've talked about before, recessionary conditions are not necessarily bad for stocks. They're bad for stocks if the recession doesn't work in tamping down inflation. If it works to tamp down inflation, then stocks go up during a recession. But if it doesn't work, then yeah, we're still, again, if I look at today and I'm looking at the future side of things, as of today, we're still down. What is this? A little over 10% from the highs. So we're still down to, I got 10.15% from the S&P highs. So still a lot of ground to make up.
Well, there's no bad news in sight, Bob.
No, of course not. Of course not. They're going to really drive it home in Jackson Hole, man. They're going to really drive it home, I think. And if they don't, I don't know if anyone saw my Twitter thread, Mike. I know you did. But I basically tweeted out that what would the Fed be doing if unemployment was at 8.5% and inflation was at 3.5? I think they'd be easy. I really do. Because the Fed has two mandates. One of them is full employment. You can check that box off for now, basically. That's one of the reasons a lot of people believe that if there is a recession, it's not going to be very sustained, simply because there's jobs are so low. But we're starting to see cracks in that veneer of the jobs market, mainly jobless claims. The JOLTS jobs opening numbers have been dropping. We're hearing about layoffs. Just hasn't quite fed into the non-farm payrolls number, which by some analysts' expectation lags by about 6 months. So we're still seeing us. And by the way, this last jobs number only got us above the pandemic levels. So we're basically back to where we were pre-pandemic. By the way, did everybody see the CDC said now it doesn't matter what you do, you can do whatever you want? You don't. It doesn't matter if you're vaccinated or vaccinated. You don't have to mask. You don't have to social distance. You don't have to do any of that stuff. CDC completely reversed everything. So for us to be above pre-pandemic levels on everything now makes sense. COVID never happened. That's where we're at. The only thing we're not above is the all-time highs, right, in equities. But for everything else, we basically recovered all the pandemic. That's why I really get excessively annoyed when I hear them talk about them creating new jobs, because both administrations destroyed the jobs. A lot of people blame it on Biden, but Trump's the one who shut down the economy. I don't blame the presidency at all, because I'm starting to think more and more that it means less and less, even though I thought it meant very little from the first place, right? So essentially the Fed printed money, and some people look back at it and say now that one of the reasons the Fed may pause is because the debt servicing costs have gone up so high. But again, debt servicing is not the purview of the Fed. So if they care about credibility, and this is what I put in that tweet thread, if they care about credibility at all, which I'm not sure they do, they have to continue to tighten. Mike Alfred, who is a pretty well-known Twitter commentator on the economy, he's going to be on our podcast October 14th is when we record with him, I believe. Send out a tweet today that said the Fed needs to hike 100 basis points at once in order to get the message across to the markets that they're going to be fighting inflation. So we'll see. I don't think they're going to do that, but we'll see. Rates are starting to slowly rise. Across the curve, they were up anywhere from 7 to 5 basis points from the short end to the long end. We ended up giving a little bit of that up. I think they ended the day somewhere around 5 to 2 basis points, as opposed to 5 to 7 or 5 to 8. And the curve, the 2s10s, went further into inversion, 41 basis point settlement yesterday. Last I saw was 43. So again, we'll see. I think Jackson Hole is the next major event. I don't think it's retail sales.
Yeah, in Jacksonville, what's that, the 25th?
Yeah, it's middle of next week.
So we got some time. Well, that's what, is there any data that can interrupt this rally to all-time highs before the Fed speaks? Well, you got Jackson Hole coming up.
Yeah. I think there's nothing coming out in the next couple of days that's likely to interrupt this rally. And there's no quiet period before Jackson Hole. So we've got 2 Michelle Bowman speeches tomorrow. She has a lot of credibility because she's a governing board member. She doesn't run one of the local feds. So one of the local feds, they sometimes have quite a bit more politics going on. So, by the way, all of those people who were talking about Michael Blurry, I like to call him Michael Blurry. He sold every single stock except one 2 days ago. Sold every single stock in the portfolio except one. He listed what that stock was, but I don't really care. I'm not going to buy one stock if he sold every single thing that he owns. So yeah, Michael Blurry sold every single stock in his portfolio a couple weeks ago or last week. I'm not sure when.
Hey, John. Hey, Dr. Michael. Glad to have you. The George, the whole market decline was to combat the effects of dollar printing and speculation in 2020. That problem isn't solved. The whole stonk mania is back on. The Fed has
Yeah.
failed. Well, you got the stonk mania back on with BBB White. I mean, that was absurd today.
Well, that's part of it, right, Mike? I mean, you yourself said that we never really got, and so did Cameron Dawson, by the way, who's the chief investment officer of New Edge Wealth. Both of you said that we haven't had this complete collapse like we did in the 2000s of meme traders, et cetera, AMC, GameStop, both going higher. But again, when you have this kind of a thing, like if you believe guys like Burry can't be wrong, then you have to be in my camp that the low's not in, the low of this particular bear market. And we are still in a bear market.
So yeah, I mean, what's I mean, how many halts was BBBY today? We're still not out of this. I mean, from
Yeah,
their prior earnings.
the stonks people were saying, oh, they halt these because we're making money.
All right, you're up 540% since earnings release
Yeah.
on a company that is literally on the verge of bankruptcy.
That's how you know the low's not in, the ultimate low. That's how you
So
know stonks are back in.
yeah, stonks. We've never got the washout in the stonks.
Right.
And it's the retail call option buying is through the roof again.
Yep. I feel bad for these people. I really do.
I mean,
I hope they
it's
start taking some profits.
we're back to that. Everything always goes up. Stonks always go up. Worthless stuff without PE ratios goes up.
Yeah.
So let's see.
On a
John,
daily,
the two tens, we just looked at that. It's nowhere near reversing the zero yet. You still got some time.
yeah, way, way far away from that. Last I
Yeah,
looked.
according to technology and data analytics firm S3 Partners, from June 16 to August 12, short interest in the U.S. stock market increased by 125.7 billion, or roughly 14%. And you're still getting your rip your face off short coverings.
By the way, the two worst months for the stock market are August and September, not October, like a lot of people think. So we've still got the worst month for the stock market to come up. There's a lot that can happen, and I think probably Jackson Hole has a lot to do with that. It wouldn't surprise me. But just historically, the worst months for the stock market are August and September. Many people think it's October. It's not.
No, October is when you can get those downdraft moves, but the worst one is September.
Yeah, it's when we've gotten them, right, Mike? I mean, you could get them in any month. But
Yeah, but majority than not, the downdraft moves have happened in October. But it's not the worst month because you generally recover rapidly in October, going into the holiday season. The
Yeah, I just
worst
looked at
month is
settlements. I'm sorry, go ahead.
the worst month is September.
I just looked at the 2's10 settlement. It settled at 41 the last 2 days. This is negative. It settled at 43 today. 2's 30s, negative 13 2 days ago, negative 10 yesterday, negative 14 today. These are settlements. 5's 10s, negative 13 2 days ago, negative 12 yesterday, negative 13 today. Those are the inverted parts of the curve that I watch. There's some parts that aren't inverted, but they all basically flattened.
Hey, Amadeus, glad to have you. I read a Forbes article that explained the retail investors have not actually capitulated yet like they did in the last bear markets. Most retailers are still hodling. That's what I'm seeing too. They're hodling and expanding again, thinking they can keep buying multiples of this stuff to get back to, because a lot of them are still underwater.
Yeah.
So they're still
Somebody,
gamifying it.
John A is asking when it happens. Jackson Hole is August 25th through the 27th.
So yeah, uh, Michael, as you call him, blurry.
Michael Blur,
Geo, that was the remaining one. The prison stock.
prison company. Oh God,
Yeah.
you could read a lot into that.
Well, we have expanded IRS agents. Where are you going to put all these people?
Yeah, you could read a lot into that.
Oh boy. So the other thing though is, so much of this has been, yes, Dr. Michael Hedfund still are piling on the shorts. If they were smart, they'd let the rally peter out because the shorts just keep fueling a rally. But short fueled rallies historically are not sustainable
Yeah.
because you have people chasing their own tail higher, but you don't have sort of the proper valuation accumulation. I'm not seeing a proper evaluation accumulation right now. I'm just seeing a lot of short covering and chasing stuff.
Mm.
No, market breadth is not improving. The depth is still pathetic.
Can I
So
answer the question? And why is it important, Mike?
why is Jackson Hole important?
Yeah.
It's not
So
Jackson
I'm
Hall. It's Jackson Hole.
Jackson Hole. So this is I'm some of this I'm going to read from the website, but this is the Jackson Hole Economic Policy Symposium. It's the Federal Reserve Bank of Kansas City's. Oddly, they don't have it in Missouri anywhere. Um, they hold it in Jackson Hole, Wyoming. The Federal Reserve Bank of Kansas City's Economic Policy Symposium in Jackson Hole, Wyoming is one of the longest standing central banking conferences in the world. The event brings together economists, financial market participants, academic, U.S. government representatives, and news media to discuss long term policy issues of mutual concern. I'm going to drop down to the bottom now. A key feature of the event is thoughtful discussion that takes place among the participants. Given the participants and the topics being discussed, there is substantial interest in the symposium. However, to help foster the open discussion that has been so critical to the symposium's success, attendance of the event is limited. So basically, what this thing is a discussion of policy, central bank policy, economics, and the situation of current economies globally. So, and it gets reported constantly throughout the day as to who said what. So, and there's a lot of private conversations that we don't see. That could be some of the concerted efforts by multiple central banks to achieve certain things, certain policy goals, and certain economic outcomes, or to attempt to at least.
George thinks, don't hold your breath for Jackson Hole. Powell's going to try to be nice again, and the market will take it as the pivot. If he doesn't come out again strong against inflation, and I think the market took his data dependent they could go to not hiking instead
Yeah,
of.
Gio, he might do that, but the market's already rallying, so he doesn't really need to, right? I mean, he doesn't need to. All he needs to do is not be hawkish, and the market will continue rallying. And I suspect, based on everything that I've seen, is that he's going to do the exact opposite. And I'm not holding my breath. Like I said, if you watched the podcast, you saw that my trade was to buy the NASDAQ. So, that's been my opinion over the last week or so. So I'm not necessarily holding my breath for anything, but I'm just saying if they essentially care about credibility, which they've discussed that they do, it doesn't mean they do. But if they care about credibility, they're going to be hawkish.
And if they don't care about your credibility, then
Big
if they don't, then again. So you've been going back with Jim Iorio back and forth. Has he agreed that a pause is different from a pivot?
Yes, he finally agreed to that,
Okay.
but he added the caveat, I'll stop using pivot if it makes Bob happy.
Now he's still
Yeah.
at the at the pause camp.
He says they're going to pivot in September. Like, that's the next meeting. Now, one thing I'll say for Powell, okay, you can say what you want, bad job he's done, etc. He has telegraphed what he's going to do. So that means in Jackson Hole, he needs to basically announce the pivot as Gio says he's going to, right? So Jim Iorio and Gio essentially are in the same camp. I just can't, again, like the Fed knows the same math that Bank of America knows. Okay, so unless you expect the rest of the year for inflation to be zero or negative, right? Man, and even if it is, okay, let's say it's 25 basis points negative month over month for the rest of the year, according to Jim Bianco, that takes inflation down to 5% year over year. Their target's 2. I'm just saying. A soft landing is a very tiny runway, very tiny.
So there. Will the option expiration date this Friday? The market be a choppy week. You got your major pin level. We're right there now, 4,300. So with gamma, call gamma is going to kick up, especially go really high on Thursday. If we're hovering around this area, start really wreaking havoc with it on Thursday.
Right.
So keep an eye on that. If we hover, even if we sell off tomorrow and then bounce a little on Thursday, if we're hovering around this 3,300 or 4,300, it'll be interesting going into OPEX on Friday. So that's where we can't see Jim's yield trade triggering either, Bob.
Yeah, I doubt it. I don't think it's going to have a hard time.
So that's anything else you want to go over?
No, like I said, for me overall, it was a pretty quiet day. I'll have more to talk about on Thursday, I'm sure. Just basically patting ourselves on the back for the things we said were going to happen happening. And again, I'm still long Bitcoin, so obviously this rally helps.
Bitcoin's been struggling even with this rally.
It really has. The correlation is broken down. Like the 30-day correlation is down to like 0.33.
Bitcoin can't seem to get any traction even with the NASDAQ running. Sterling asks, are credit spreads improving?
Yes, slightly, but not enough to say that they've improved. Does that make sense? They've improved slightly, but they're still kind of teetering on the danger zone. If you guys want to hear a really negative take, you got to watch Nouriel Roubini's last couple of interviews. Dr. Doom.
Well,
those are brutal. He basically said a prolonged recession is guaranteed. And it's going to be deep and prolonged.
Deep and prolonged, huh?
Yeah.
All right. Well, there you have it. So we shall see, won't we? Oh, by the way, just to remind everybody, or in case they didn't watch or listen to the podcast, what's your target on your NASDAQ?
Hang on. I just had it.
You don't have it memorized?
No, because I have other things. Hold on a second. I just have the the target in, so I got to open. I had shut down my platform. Hold on a second.
What is that back? We got a lot of background noise, huh?
It's not on my end. It is dead silent here. Target is 1404. 14040.
So right in front of the 200, huh?
Yeah. You probably could have guessed.
All right, and right behind the 50% retracement level.
Yeah.
So there we go. We'll probably have to get another sustained push higher. All right.
No, Nouriel Roubini is Dr. Doom. That's always been his nickname. I actually think that might even be his Twitter handle.
All right. With that, let me just get to some recap of the markets, and then,
All right, I'm gonna jump.
all right, we will chat with you on Thursday.
All right, guys. See ya.
All right. Bye. Hey, everybody. All right. Just me back. Just me. So, uh, the bar actually, did that close red today? Did we actually, is that what I see? A little red bar? Wow. Look at that. Look at that. Uh, Daily cycle still trying to get to the top, pinned up against that overbought level. Again, what I'm watching are these yesterday and today's lows in that vicinity overnight. You can see how we're getting the flattened 1 hour rotation zone, the 4 hour. We tested this morning before the little launch move, and that was in the NASDAQ. Here's the S&P. You got the launch move out of, this was really nice, the launch move out of the little channel, running up, and then the quick little channel retest. So pretty much still top of the 4 hour holding. If we start getting it closed even overnight below about 42.90, 42.92, then I'm going to start targeting closer to the pullback. If we break down with retail sales, about 42.75 area. But intermediate still 42.82, and that would just be a minor pullback area. You still have this. What I am keeping an eye on, though, is this is a wedging pattern again. This is a wedging pattern. So I am going to keep close eye on it. I'm not expecting it to hit the target, but I am going to keep a close eye on this coming up. We got a nice little wedge pivot, and you have a wedge forming. So I am keeping, oops, what? Oh boy. It's just going to be one of those days, isn't it? There we go. It's just going to be one of those computer days, starting off on the wrong screen, which shouldn't have happened because it was locked. But there would be, it would just be, if you did get the bigger wedging pullback, that's your target line. So I don't even need to do the breakout line because it'd be the 50%, but it would roughly be up here. We got the 62.5 in the way. So that's, if you're learning wedge patterns, that's your little wedge pattern target. But we're a long way off from potentially even triggering that. And the bigger pullback level is still about 42.30 on the S&P. NASDAQ, and the S&P, by the way, was still a green bar, still up 28 basis points after hitting that 200. NASDAQ was the red bar. The major breakdown level I'm watching is about 13.5, and then it's just in the key support to 13.4. So that's still your big pullback if it's triggered tomorrow. Next rally up is still this 13.915 major level. Minor level, I'm just keeping an eye on the bottom of this 4 hour rotation zone for the first breakdown level, and then that 13.5. Dow really launched this morning. That's where it was virtually, let's just buy all the Dow stocks. What's so interesting is this is even getting to, for even if this was a bull market, this would be getting to major nosebleed overbought territory. That's what's so fascinating. So can it keep going? Yeah, but we're going to reconnect sooner rather than later with the rotation zone. Can that happen with another sideways move? Sure, which is actually still a very bullish case. The key close on this today was 34,127. The 50% level is the 62.5 is 34,131. So that's something I'm keeping an eye on very, very closely. The short-term pullback area, that I'm watching now is 38,875 and then 33,730. I mean 33,875 and 33,730. Russell hitting some of these just minor stuff. We don't have to recap that. The Russell next minor target 2039. 2039. The breakdown area I'll be watching 2017, and then major is 2000. DAX still just climbing up towards that next minor target. Nothing else to really report on because we're already above that 62.5. So technically we should still see some higher price action in the DAX, and you still have gaps to fill to the upside. But I'm watching for the pullback in there. Notes still caught between key support and resistance, so nothing's changed there. Crude, little bounce going into the close of crude, but now your major resistance is about 88 after coming up again to test the rotation zone today. So rotation, the bottom of the rotation zone in that 12.5% little from these lows. That's your key area, 90, 60 if we do get through 88. Still favoring my next, before we get down to all the way down to this 77, my next very key area is about 83.29 to 84 to test for some support. By the way, this potential double still is in play. Natural gas, by the way, we haven't covered that in a few days. Why am I covering it now? Remember, you got the trigger, the pullback to rotation zone, and now virtually completed the double targets. So this I'm just marking as over. And we close back above that key harmonic level, and we've retested the high area. So if on a continued rally, the next area would be to this 664 to 972, and major support now coming in at 8653. But that's done too. Dollar index pause against that 50%. So I'm really keying off that if we get an intraday break above about 106.81 and then a close above that. That's the bull case. On a pullback, support's coming in about 105.50 to 105.60. VIX, still potential double bottom in play, but long way off from triggering. And your key support with this, not for the amount of bullishness in the S&P and Dow, not as big a drop as I suspected, probably due to retail sales coming out tomorrow morning. But still going to watch for last Friday's low to be broken for the bull case to resume. Remember, we still have OPEX, as I touched on before, coming up Friday, and the key pinpoint is 4,300 still. Euro still potentially watching, stalling out at this 50% support level, still watching for the shake and bake pattern, which really needs that move below the 62.5. So keeping an eye on that still. As we touched on before, Bitcoin, a slight red in the NASDAQ today. What was that down? 13 basis points, but Bitcoin's still down 68 basis points. Has not been able to get any traction, but I can't justify selling it till it gets below 22,607. And to the upside is still massive selling pressure with the rising channel and above 25. Tesla down 89 basis points. Still that double top is in play. Would not be doing any front run pattern based off the amount of meme go-go juice call buying stuff going on with this. Not necessarily Tesla today, but still with the meme stonks. So would not step in front of any topping pattern in Tesla. Your still key level is 953.27. Sterling, is that the same wedge pattern on the YM? You can do a wedge pattern on the YM. Here would be your pivot points. It's broken. You don't have a redraw yet. That's the problem with the one on the YM. Because it's technically broken out. We don't have a key redraw yet, so I'm not going to do a projection line until we get a key redraw. Let's see. VIX is gonna. I think it's more so geared towards April, where we could see some. I mean, April, September, where we could see some VIX explosion. Is that a potential cup and handle on natural gas? Yeah, that's a potential cup and handle. That's a valid cup and handle. And if you want the full measured move, that's actually a retracement extension from a cup and handle. So next target, you got 1020 to 1031, and then your major target area would be up around 12 bucks, 1197, and you got a harmonic at 1170. That's actually a nice one for a breakout play. On Tesla monthly, no, you could still get a massive head and shoulders in here on a monthly basis. Shoulder. Still don't like double heads or slightly lower probability, but that would be a double head right there, and this would be the other shoulder forming. And it could rally more. Where you wouldn't want, what would invalidate it is if it started getting above 1165. So yeah, that could be still be a massive head and shoulder. Where do I have that projected from? I still have it projected from way over here. So I still have it projected from potentially breaking down a couple months. Let's see. September, October, November. I still have the breakdown level still ways off in the future, but yes, that is still potentially valid. But that's nowhere near triggered yet. The only thing you have in the short term is this potential double top. But that's not even triggered yet. What's interesting is now on that daily basis, if this did start pulling back substantially, you have the daily rotation zone out of the way. Saw a couple other things. Don't know if the individual's still here. Hold on, let me take this off. I'm sorry I did not get to every... I saw your comment. That was very interesting, Sterling, about the IRS agents. So let's see. Where do we sit? Now Ross Lias. AMTD. Oh, boy. Well, it sure did round trip, didn't it? Vertical up, vertical down. See, this is what people don't get with this. I mean, unless you catch it, you know, so many people, I feel sorry for the people who get in these things late and are just holding the bag. I really feel bad for them. And the more people who keep asking about this, and it is garbage, by the way, at least this one has a slight P to E. But your levels, if you're looking for another squeeze play, again, I cannot predict squeeze plays. You got to go to the Reddit boards for that, and I won't participate. Not going to be involved in that. That's not learning to trade. That's learning to gamble and play stupid Reddit stuff, from my perspective. You're better to learn to focus, to actually learn to trade, because at some point this will dry up and go back to the what I call still pink sheet land. 480 is your next target to the upside. If you break below today's low, I'd watch for a retest of 277. What's interesting is you theoretically should retest at least a $1.40. If you're looking at, what was the other one you wanted to see? MEGL. I actually find these amusing. See this? All right. This is when I stop seeing garbage like this, will be closer to a long-term bottom. Theoretically, could you make Tom new highs first if the Fed does pause and everything else? Theoretically, yeah. But that won't be a long-term bottom then yet. We won't have put in a long-term bottom. Because as you see a stock open at 50 bucks, trade up to 249.94, trade down to $10.30, this is not sane, rational, or warranted in an orderly market. I'm not saying you can't have volatility. Okay? And before you call me a boomer, I'm not. I'm not saying you can't have volatility. This is penny stock, pink sheeps, OTC garbage that just happens to be listed. And once we start getting away from this, we'll be back to more sane markets. Mike, so, I mean, this, again, if you're going to try to do something, here's what you do. Because I'd rather have you know certain tools. You should focus on harmonics. So if it were to break with another squeezy upside, you can at least have a target. 38.27, then 68.51. This is at least, I'm going to show people who want to try to trade this garbage, at least have targets. All right? Because then you know how to take action. Look, you can't even get a stupid target to the downside because this is such garbage. I mean, what's it going to be? See, it's garbage. It's absolute garbage, so we get to use the reverse harmonics. 620 something. So if you break down 628 and 454. But at least use some semblance, and that's exactly what I do for regular IPOs. And I'm not talking SPAC garbage crap. G-Box. What? G-Box. See, it says it right there. Look. What are the initials after G-Box? POS. What does POS stand for? Piece of. There you go. That's all you need to know. It's in the title. Here, if you want to know if it's insane, when you see this kind of price action, what's the first thing I look at? P to E. Why do I look at P to E? To see if they have any earnings. Not talking revenue, I'm talking earnings. And when you see this kind of stuff on a stock that has no earnings, it's turned into a gambling meme stock. Because it can get pushed around. So yeah, I put this in the gambling meme stock category. And you can say, look, well, yeah, they surprised the upside with earnings. They on this is non-GAAP, and they still have no legitimate earnings. So would I be really gearing off of this? Because I want GAAP earnings, not non-GAAP earnings, by the way. And if you need targets for this, you're going to use your overall. So I got to adjust that. Those are the areas you're going to use. So your downside is actually 191, your 175, and then 124 to the downside, bouncing off that 50% harmonic. So if you retest 277, you got 328, which is key. Speaking of garbage stock, is there a confirmed double bottom space and confirm mini double bottom on the daily that could potentially front run the larger weekly double. That one is with the weekly double. Hold on. Let me get back to I did that one no, it didn't. Let me just see another. I will be so glad when this crap is over. Never triggered on the weekly basis. Probably triggered on the daily basis. Hit the first stop level. I don't send my blood pressure to the moon. I actually find it. You know what it's taken the market and turned it into what used to just not even be listed crap, because there was a reason it wasn't listed. When this stuff started being listed, that's what really pushed my buttons, shall we say, because it has no place to be listed. But we have no regulators and we have no governance and everything else. So after hitting that stop reduction on the daily, your key level is 642. If it turns back up, you have this gap here. Again, what were their earnings? This is why I don't follow this stuff. That's just horrible numbers. I'd rather wait for things to be legitimate companies, but you break back above about 727. You know, you got the gap fill to the upside. That's the only play. And that could stay in place as long as you don't get below the 642. You were asking now, is there a mini double bottom on the daily? You mean this? This little, ugh. Hitting that first harmonic. Yeah. These pullbacks haven't been enough yet to invalidate it, so you get a close above 716, which you haven't gotten yet. You have your target 743, 757, and 770. And look at that second target right at the 62.5 for the gap fill play. So you get a close below. I mean, you get a close above that 62.5, and essentially that second target 756. You got the gap fill play. So if we can continue in La La Land, and this can actually get some juice going, you got an upside play. Now, if you come back down and fill this gap, that doubles over, which it's confirmed but not triggered yet. At least on the daily. Intraday breaks, and this is why if you're going to play intraday breaks, if the thing does not trigger, my advice, especially on crap stocks, is don't hold it. Break above, fake breakout. Break above, fake breakout. So if you're trying to play these intraday and then you don't get the close, hey, done. Done. There's no point. Yeah, I saw it. I just have not had a chance to respond. I'm going to put together the simple rules and get it out there sooner rather than later for both the percent B and the long-term system. So yes, and they will be sold. Okay, I'm not giving away all this for free, especially since I'm buying the whole new streaming rig, and we're trying to keep the streaming free for everyone. But they will be sold. But I'm going to get the basic rules out sooner rather than later and add to it over time. Really, dark screen sleep. I appreciate you being here. Did something change with this? Where do you want to get to? $9, if I remember. I think you're going to get now the pullback to $3 easily. Let's just see where we look with the harmonics. Based off this action not being able to get above there, I'd say you're going to return to 276 over the next few days. Probability-wise. Divergence with the... unless this gets another epic squeeze, but this squeeze is worn off. If you're playing still for the squeeze play, again, I don't follow these. If you're playing for the squeeze play and it actually comes in, your next targets are 475 area and 515. There you go. You're welcome, Genomic Stock. Can we do those BBBY? Sure, then I'm going to call it a day. BBBY, I mean, this, there's so many people who just run this up and then they'll just turn into holders. That's the problem. I mean, unless the squeeze can get going again, which I cannot predict. I mean, the only way I watch these are with the options and with the volume breakout if I am keying it off. And at least BBY is more so traded until it turned into a meme stock. But again, if you look at the P to E, you don't have one. If you were looking to play this on a pullback, it would be 1650 and then major would be 1350. You get a close below 1350, I'd be stepping aside. And then I'd be using the harmonics. 1950, which are still above. 2256, 2558, 2860. And if you can, there's some major topping area, which has been hard to break on the last couple mini squeezes. But if they can get the squeeze going, if they can really juice it higher, and that's a big if at this point, 3162, 3464, and then you get above this 3464, you're into prior squeeze toppy areas. Fubo. Hey, what did they do for earnings? Oh. I mean, this is what gets me. Like, all right, they're still massively losing money. Okay? Massively. And we go up to the high 240% in literally 12 days. Fubo 524 and 452. Really pay attention to that 452 because you break down below that, you're going back to this low area. Interesting enough, if they can get another squeeze going in this one, right, probably to that 200. I would not ignore. Look at that, the breakdown zone from over here and the first harmonic target. So 884 to 959 roughly. I'm not doing any shorter term analysis than that. Other than that, if this holds tomorrow morning, I watch for a rotation back up about 670 if they can get the squeeze going again. So those would be the next targets I'd utilize. Is everything looking the same? Oh. Hey, does this one actually have a P to E? But it's based off of gap accounting. Ooh. Huh. Oh, Party City. Now there's a company for you. At least they have a P to E. At least it still looks like a squeeze play to me. What's interesting with this one, though, is you got that gap. You got that gap left behind. This one's actually a little more interesting. Oh. All right. Above 228. I'm not going to put on the gap harmonics. You can do that yourself. 269 and then the breakdown zone 306. You get a close above 310. I'd be targeting that 200 again. That one's actually more interesting. Key support is coming in. This one's actually, as long as all the ones you've shown me, this one's the most interesting. I'd be cautious with this unless it can really get the juice going. I'd have to look at the short interest and everything, but your key support now at $1.68. So I'd actually be watching for slight little pullback moves still. It would either be the pullback or the breakout back above this to this upper area. The pullback area, I'd be watching the 1 hour rotation zone. And the major support's back at that 168. Is there any truth to the thesis that these meme stocks can be benefited by a market sell-off causing shorts to have to cover? Several of them seem to have decent amounts of negative beta. Is there any truth to the thesis that these meme stocks can be benefited by a market sell-off? I'm not understanding by a market sell-off. If the market, I mean, these are just played off of the short juice again. So we start getting a sell-off, you'll have the shorts coming back in because the valuations just aren't there. And the shorts, and it's also the stuff with the options, the way they're being juiced. I don't know if there's any truth to the thesis that these meme stocks can be benefited by a market sell-off. Market sell-off will increase the short interest again. Then when we get the next run-up, you could get another short squeeze again until this whole thing dies out. Hey, Lauren. I'd have to think about that more. All right, with that, I'm going to wrap it up. Been a long streaming session. Apron. Blue, is that a Blue Apron? Yep. Cool. Yeah, Blue Apron. Let's just glance at this one real quick. You know, when these all roll over and play dead again, it'll be interesting. So again, the juice, everything's gotten a lot of this juice to 37.5. So next one would be 50% for Blue Apron, and you still have a gap left over here. So that would be the upside. Key support I'd be watching on a pullback to would be $4.92 to $5 if you're one to play that. If that doesn't hold, watch out below. You're welcome, Daniel. All right. Talk to everyone tomorrow. Remember, retail sales 1 hour before the open, so 30 minutes before the live stream. I will see everybody then. Have a wonderful evening. Bye for now.